All right. Hey there, everybody. Good afternoon, good morning, good evening, depending on where you guys are at. I hope y'all are having a good trading day so far. As always, we'll start with SPX. But of course, if there's anything else that you guys want to look at or talk about, let me know. And I will be happy to pull that up. Hey, Rick, great to see you. Good morning to you. Hey, Jane, Polly, Lorna. I hope you guys are having a good day. Tom, Turbo, same to y'all. And really, once again, guys, sessions here are a great place to ask any questions that you have, whether it's around the market, whether it's around a specific indicator, a strategy, and I will be happy to go about it in more detail. Certainly, with SPX this morning, we just continue the stair step higher. This is something that I've been talking about across simpler trading. Tom, I see AMD, absolutely. And McDonald's, we can take a look at that as well. Hey, Sylvester, good to see you. We can also go over the Uber trade that we did in the $500 challenge recently that we closed out yesterday, and also check how AI is doing in the $500 challenge account. So we'll take a look at both of those as well. But back to SPX here. So we've been talking about this now for quite a few days here at Simpler. And what I've mentioned is basically when the market starts to go back into that bullish trend again, it's not uncommon for it that once it gets a pullback move and starts to bounce up, especially if it's happening off of a squeeze firing, which we just had a low compression squeeze fire, and there's room on momentum for it to sometimes trade along the upper Bollinger Band. It never quite feels like you get that pullback on the daily chart to be able to re-engage the trend, right? You have to either be patient and wait for a stronger pullback at least into the 10, if not the 30 period simple, or right, if you've been watching this move up for the last few days and you're like, man, I really wanted to participate in this, but it feels like it's just, continuing to fly to the upside. Well, the best way to do that, in my opinion, is to go back to an intraday time frame, right? Watch the intraday charts to see if you can get that pullback. And so, for example, back here on the 17th, right, what happened? Well, we had a little bit of stalling on the 1 hour chart, a little bit of consolidation. It allowed the momentum to pull back some. We had a low compression squeeze start to form. And then that next day, going into the morning on the 18th, we opened with a bullish divergent bar yesterday. Momentum started to pick up. We had bullish signals on the compound breakout tool. And then we had, once again, that nice stair step up along the upper Bollinger Band. And today, it looks like it is trying to either at least continue or hold on to that strength. So the last hour actually made a bullish divergent bar that gives us the possibility of at least going back up and retesting those highs around 45.76. and potentially surpassing them. As long as we can maintain our shorter time frame support levels on the 5 and 10 minute chart, then that's a good sign that they'll hold and we could get that bounce back up into the close. Certainly, the 5 minute momentum's reset and is starting to pick back up with bullish signals. 10 minute chart's still more in consolidation. But in my opinion, as long as it can hold the 30, that's a good sign that we'll either at the very least stay within this range or continue to the upside. Hey, Mirza, good to see you. So that's what I'm looking at for the market right now in regards to SPX. On the daily time frame, there's still at least there's still quite a bit of room here for momentum to really continue to the upside. So we got some time. This trend could continue to trade along the upper Bollinger Band if it chooses to. So remember, if it doesn't seem like we're getting that proper pullback on the daily chart, but you want to participate in this move higher, consider going to one of the smaller time frames like the hourly or maybe the 4 hour chart. See if you consolidate or pull back into support on those levels. And if you do, especially if that first line of defense of the 10 period simple maintains support on a smaller time frame like the hourly chart, that could give you then the re-entry to try and play it to the upside. So something to be mindful of. Bigger targets right now, 45.75 is of course a psychological level, so it makes sense why on the intraday charts we're kind of stalling there. If we can manage to break above that, the next big level, in my opinion, to play to the upside is the 4,600 level, which when we pull up a weekly chart, right, 4,600 is where we had roughly those highs back in March. Technically, the high was 46.37. And then that's where we kind of stalled and had that pullback. So that should certainly be a big level to at least go and test. I could also see it be a range where the price maybe finally gets that pause to stall. But even on the weekly time frame, you can see the trend is attempting to turn bullish. The 30 is getting higher and closer to the 100 period simple. So when to cross above it, that will form a bullish trend. We still have room on a weekly momentum higher. We had an excellent compound breakout tool bullish signal back here, which has remained valid. And then, of course, that weekly squeeze has been in the process of firing. So, beautiful move to the upside. And if we can start to get going back again into a bullish trend, if we can break the highs that we had at the end of 2021 before the sell off last year in 2022, then, this is more a characteristic of that market environment and something good to know. Oh, absolutely, Lorna. Let me check that now. Um, okay, let me know, Lorna. I sent a message back. Let me know if it's a meeting or if it's what I just referred to, because I do have that on the calendar. Okay, yeah, that's not a problem for me, at least. So, let's go back here. So on SX, like I said, still has room to the upside, still has that overall bullish sentiment. So for myself and my account, I have been focused a bit more on bullish trades. So like I mentioned just now, so my focus right now in the account has been a bit more on those bullish trade ideas, right? Because if the market is turning back into a more bullish trend, that's the main focus I want to have in my account. And so for the $500 challenge account, which is something that we alert out here to the free room, it's something I post on Twitch, and I send out alerts through Twitter, and of course the small account mentorship and across the simpler rooms. We've been focused on those bullish trades. So Uber was one of the setups that we took the other day, which allowed for a great overnight win. Part of the reason we jumped into this is because we had a bullish divergent bar off the 10 period simple and an overall bullish trend. So we had a slight pullback move. You might argue it was more consolidating move, but either way, it pulled back into that 10 period simple. It held support, gave us that bullish divergent bar. We had positive momentum with room to move higher, still do actually, still have a valid bullish signal on the compound breakout tool. We had a squeeze. And then on our smaller time frames, we actually had a 1 hour squeeze that was setting up when we jumped into this trade, bullish signal on the compound breakout tool, momentum building up off the zero line. Here you can see as well, it was a pullback move. We started to bounce up into the close. The trend was still valid. So all of that looked good to me to try and continue to play this higher. And then because of that, right, we jumped into a bullish trade idea on Uber with the 47 long calls to try and play to the upside. And yesterday, excellent follow through on those bullish divergent bars for a higher high. The hourly squeeze ended up firing to allow for a quick win. And so, as soon as that got to 100% return, I was more than happy to take it off the table. I know some of you guys were able to get a better fill than me. If you did, well done, right? Excellent work. But to be able to get 100% return on my capital risk on an overnight trade, I'm always for taking the quick win. Today, you can see it technically pulled back a little. We're kind of trading within the same range that we had yesterday, but the strength is bullish. So for those of you who certainly are maybe doing this in a larger account than my $500 challenge account, and you maybe opened more contracts than I did, please don't hesitate to have left a runner on. I tried to make that clear in the alert that I sent out, that if you had multiple contracts, you might consider a runner. And the reason why is technically nothing has changed about this chart setup, right? There is still room on momentum to continue higher. We still have a valid bullish signal on the compound breakout tool. We still are in a squeeze on the daily chart. So even though that hourly squeeze has fired to the upside, the daily squeeze still remains valid to try and continue to play for this energized move, if you will, to the upside. Bollinger Bands are still opening up. And then, of course, you do have the added benefit of earnings coming up at the start of August. And for those of you who don't know, basically, especially when we start to get back into bullish trends like this, it's not uncommon for symbols that certainly are in bullish trends themselves or turning into a bullish trend, right? They're leaning into one of those to start to get a run up into their earnings announcement, right? It's not uncommon to get that bullish sentiment higher into the news. And then, of course, however the news plays out, whether it, benefits the market's excited about what it hears on Outlook, or, it beat expectations, right? That might cause a gap up. If it disappoints, that could cause a gap down. But either way, right, doesn't matter. The way that I look, one of the ways at least I look to trade it is to play for that run into the announcement, right? That build up in energy and that build up in underlying price going into the news. And so the technicals all currently still match with that. So if you have a runner on, personally, if I had a runner on, I'd probably still leave it on the table for now, especially if it had time on the trade, to see if we can't continue to get that push higher. Now, for myself, I only had the one contract, so I took the quick 100% return on that trade. And what I would be waiting for at this point is very much like SPX, see if I can't get a pullback. If I get another pullback into support again, like the 10 period simple, or I get another bullish divergent bar, which of course gives me that high probability of a higher high and follow through, then I might consider re-engaging in this, jumping back into something like a new long call and trying to play it higher. But for now, more than happy with the quick win that we took on Uber there for the challenge account. The other trade that we're in, which I still currently hold, is AI. So AI, we jumped into this one with a similar sentiment, right? It had a bullish divergent bar, it had bullish signals on the compound breakout tool, it had a squeeze, it had a recent true low. And so all of that looked good for the possibility of trying to move higher. Now, unlike Uber, where I just jumped into a long call, on AI, I did a vertical spread because even though I like the bullish sentiment, one of the cautions I had around this trade was the fact that we do have some price resistance here around 45, and the Bollinger Bands weren't strongly flaring open yet, right? And so you always want to be mindful that if we do bounce up, but the Bollinger Bands remain flat, if that price resistance level wins out, that it could basically act overall as a resistance to where the price has trouble breaking past that level. And that level to me is around 45. So what I did here, I decided to turn this into a vertical spread, right? Do buy to open the 42 and sell to open the 45. And I do have this over in my Moomoo account. But just to make it a little easier for you guys to see, this is basically the trade setup that I'm in the $500 challenge account at Moomoo. And so you can see we're up a little bit. I'm in this for, I think, a 99-cent cost basis. So arguably it was up a bit more earlier this morning when we were trading at the highs today at 43, right? Because it was a little bit more in the money than what we're seeing now. Certainly, if you want to close it here and call it a scratch, I don't blame you, right? Do what you think is best for your account. I'm going to keep an eye on this, though, going into the close today. If it makes a bearish divergent bar into the close, I might consider cutting the trade and just calling it a scratch and moving that capital on to a new trade idea. But the reason why I kind of want to wait is because I do like that we still have a valid squeeze. The bullish signal on the compound breakout tool is attempting to print again, which of course would benefit our trade. We're starting to get a green bar off the zero line again for momentum, so that looks good. We're doing a good job of holding the 10 and 30 as support. The 10 has managed to break above the 30, so they're still kind of converged around one another. But when the 10 period simple is technically above the 30 and both are above the 100, it is a stacked up bullish formation. So we have that as our benefit. The only thing I am not a fan of at this point is once again the Bollinger Bands. The Bollinger Bands are still relatively flat, kind of showing that convergence. So that's the only caution I have. Everything else, though, looks good to where if we could go up and test that range of 45, it puts our spread in the money and should definitely allow for a profit. The benefit for us on this trade idea is we did give ourselves into the end of the month, right? July 28th to try and let it follow through. So we do still have time on the trade to kind of sit through some chop if need be before continuing that bounce and strength higher. And so that's what I'm watching on AI. And of course, you know, after closing out of Uber, only being in the one trade, we're still pretty light on capital. We have plenty of capital left in the $500 challenge account to look for a new trade idea. And so that is certainly something I'd like to get on the table into the close. But of course, guys, you never want to force a trade, right? And it's easy, certainly being on this side of the mic, wanting to get you guys trade ideas to try and force something to y'all and get it pushed out there. But usually when you force a trade idea because you're eager to trade, right? You just want to have something in your account and jump in, is where you can start to get a little bit emotional and in turn get into that dark side of trading, which is what we want to avoid. Because when you go into the dark side of trading, when you get too emotional about something, it is easier to wind up with a loss in your account rather than a profit. So I'll still, you know, be looking for a clean tech to jump into. But if I find one, I am certainly eager to get something in the $500 challenge account again, and see if we can't take another profit there. And then Bam saying, if I left a rudder on for Uber, what would my target be? Probably for Uber, my next target to the upside would be around 50. 50 is a great psychological level to try and play into. Now, I can't say whether it's going to get a strong stair step up like it did here to try and get into that level or not, right? That's, you know, a little bit hard to guess at this point. But I would say it's looking good for it. The squeeze is attempting to fire. There's plenty of room on momentum to move to the upside, and you have the benefit of earnings coming up. So if it does, very much like SPX, continue to trade along the upper Bollinger Band into earnings, I don't think 50 would be out of the question for a target to hit prior to the announcement. Now, if it gets up towards that range or maybe a little shy of it, like around 49, and it starts to stall, then I'd probably go ahead and take the quick win. But that's what I'd be looking at there. And Rob, a runner is basically if you hold multiple contracts on a trade idea. The idea is when it reaches a certain profit, you take the majority of the contracts off the table, and then you might leave one or two on to continue to try and play the trend, right? Especially if there's nothing that's broken about the trend in general. And so that's a runner. For example, one of the trades that we have in the small account mentorship right now is MDLZ. And on this trade, I specifically opened multiple contracts because it held the 100 period simple as support yesterday, also had a bullish divergent bar, bullish, bit more of a bullish signal on the compound breakout tool. So that's a good sign that at the very least we'll test resistance. If we can break above the 30 and this remains valid, then it's a good sign we'll go up into the ATR trailing stop. But we also had a true low signal, which when you print that, can usually allow for a good, stronger trend move to the upside. So similar situation to Uber, what I'm looking for here is that possibility that we pick up energy into the earnings announcement, kind of like what we saw on the last earnings, right? Going into the news, we had that trend move higher. And then what I will ideally look to do is take a profit on one of the contracts and then leave the other one on the table to see if it can't follow through with a bigger trend move through the announcement. Right? So that's kind of the idea of a runner is you've taken the majority of your profits. Ideally, all your risk is covered, right? It's basically paid for the risk on the remaining contract that you hold. And then you let that contract really go and follow the trend until the trend starts to break, right? In the case of Uber, you might continue to hold it until it starts to break the 10 period simple or something like that. So yeah, happy to help out there and explain what that is. And then where do you find 50? So yeah, let me go back to AI. And then we'll go over some of these other symbols that you guys want to look at too. But for the reason 45 was the level that was kind of my target, as you can see here, we got close to that range right before the earnings announcement earlier on AI, up into 45, and then that's where it kind of stalled and pulled back. Here we got into that range again. We were able to break a little bit above it for just a couple of bars, but you can see for the most part, either on the closes of these bars or on the highs of these two bars, 45 was kind of the level it started to stall at. And at the time of the entry for our trade, that was also where the Bollinger Bands were flattening out at that moment. So that's why 45's kind of been my target to the upside on AI. That's part of the reason why I chose it as my short strike. So that way, if we could go up and test it, it means the majority, if not all of the spreads in the money, and we could look to take the profit off the table that way. So that's how I found that Dutchie to be for that level there. So that's what I'm seeing for that one. Let's go ahead. We can take a look at AMD as well as McDonald's. We do, of course, have Tesla and Netflix earnings today into the close. So on AMD here, so here's, a great example of the caution that I kind of have on AI about the Bollinger Bands. AMD, you can see, was in a bit of consolidation. The 10 was in between the 30 and the 100. Momentum was going back towards the 0 line, which can be a sign of chop. We have a squeeze building up. We did have a recent true low. The last time we printed a true low back here, you can see you had that stronger trend move to the upside that ultimately followed through. So could get that possibility again. But the issue right now, the thing that's kind of holding AMD back, in my opinion, is one, you do have the ATR trailing stop above you that could act as resistance. That's just shy of 125. But the other thing, and I would say the main thing, is the Bollinger Bands. Notice how the Bollinger Bands came down to meet the price. The price put pressure on the upper Bollinger Band here back on the 14th, and the Bollinger Bands didn't budge, right? And then the next day, they still came down to meet the price. So when you kind of get this pressure put on the Bollinger Bands and the Bollinger Bands aren't even budging, like today, for example, we exceeded the second deviation Bollinger Band, tagged the third, and then pulled back, and those Bollinger Bands remained flat, right? They're not flaring open. Usually, when the price puts that kind of pressure on the Bollinger Bands, they start to flare open like you see here, and it's a good sign that the trend move is going to occur. But when the Bollinger Bands stand their ground, right, when they do not move, it's a clue that they're not anticipating that move higher, and in turn, the price can sometimes pull back off of it. So today, right now, for example, we're trying to make another bearish divergent bar that could clue us in to a lower low, kind of like what we saw back here within the next few bars. And of course, if that happens, it seems like we're just still kind of stuck in this choppy range, if you will. Now, if we can the next day hold the moving averages as support and try again, we could find that the underlying price puts enough pressure on the Bollinger Bands to kind of get them to open to the upside. And maybe we could start a run into earnings. But I will point out on the last earnings announcement, AMD didn't really get that run up in favor of going into the news, right? It kind of consolidated. And then after the announcement, once it pulled back, held the 100 and then bounced, that's when we actually got the follow through of the trend move higher. So I would be just a little cautious of that here on the daily chart, with the sense that it's attempting, right? The underlying price is really attempting to try and get higher, but you have some resistance around 124 that's causing you some issue. And then you have some of those other consolidating signals on the technicals that are also causing some issues to where we might actually just chop into that news event. So for me personally, nothing that I'd really want to see here to take. Now, really quickly, let me show you the opposite of that situation, right? Microsoft actually had this recently. So Microsoft, not too long ago, right? It too had Bollinger Bands that were relatively flat. But here, you did have the benefit of a bullish divergent bar. This was actually one we talked about in the small account mentorship. And I walked through a trade idea. I wish I had taken it myself because it was a very quick win. And well done for those of you who did. But you did have a bullish divergent bar off support. Unlike AMD, momentum was above the zero line, building up off of it with green bars at the time. So that is a bullish trend move. You had the bullish trend signal in the compound breakout tool. You had the squeeze. And then what happened the next day? Some great news came out. You got the follow through on the higher high for that bullish divergent bar. You actually made a third deviation Bollinger Band snap and another bullish divergent bar that day. And as you can see, the squeeze is starting to fire. The bullish signal remains valid. There's still plenty of room on momentum to continue this higher. And with a third deviation Bollinger Band snap, when the price exceeds that third deviation, for those of you who don't know, there's a good probability that either the underlying price will stay within this bar's range or it will actually continue to the upside. So you can see today we haven't followed through with a higher high yet, but we are staying basically within the top half of this range. And it looks like we actually made another third deviation Bollinger Band snap today. The high of today's bar was, so far at least, is 362.46. Oh, just a little shy. No, didn't quite exceed that level. Looked like it. 363.11 is the upper Bollinger Band. So got close to exceeding it, but not quite there. But you can see how here, right, the underlying price did put pressure on the Bollinger Bands and forced them to flare open. And that's the ideal situation that you really want to look for on a trend move itself. For those of you in Microsoft, right, similar situation. If you were in something and took your profits, you might have a runner on because there's nothing invalid about this setup. And you have earnings coming up next week, so it could continue to run higher into earnings. Microsoft is no stranger to doing that at all. And Aaron is asking, aren't the squeeze indicator and the Bollinger Bands redundant? I don't think so personally. So for those of you who don't know, the Bollinger Bands are a part of what creates the squeeze. There's also other indicators that are mixed in there to create that setup. But I personally, the Bollinger Bands have been one of the very first indicators I ever had on my charts on top of the 10 and 30 simple moving average and the awesome oscillator. So a part of me keeps it up there because I'm a creature of habit, right? They're the very first indicators I use, and they're useful in my opinion. But the reason why I still think the Bollinger Bands are useful to have, even if you still have the squeeze out there, is literally from that visual aspect I mentioned. For example, on the squeeze, I can see that it's building energy, but I wouldn't know if it's starting to flare open, right? I can't tell that visually about the Bollinger Bands looking at this level. I can't tell if the price is putting pressure on the Bollinger Bands and the Bollinger Bands remain flat, that there's a good chance that we're not going to move higher, that it's going to stall. And so that's part of the reason why still keep the Bollinger Bands up. And then, of course, the third reason is because I also track the third deviation Bollinger Band, because when the price moves outside that level, that's also a clue that it could actually keep going that way. And so to me, in that situation, I don't find them to be redundant in that case. I still love the squeeze because that, with everything combined into it, tells me when energy is building up for a greater than anticipated move, which I like to use. But you can't get some of the visual aspects, the little nuances that I really like to use on the Bollinger Bands. You can't get that from looking purely at the squeeze. So I hope that it answers your question, but that's why I still like to have that separately up on my chart. And then I see a few others came in, so let me add these to the list. MRVL and Apple's exploding. I'm all for that. I got a bullish trade in Apple, so I'm more than happy to see that bounce. We'll take a look at that too, but let's start first with McDonald's. And then for myself, MB, I actually use the 10 period simple moving average versus the 8 EMA. And once again, that's just because I'm a creature of habit. So when I first started to learn how to trade, the people that I was learning from used the 10 and 30 period simple moving average. When I came here to start working at Simpler, I actually compared my charts to John. And we were just kind of like looking through. I was like, these are the things I like to use. And he's like, okay, cool. Here's what I like to use. And we actually pulled up like the 8 and 21 EMA versus the 10 and 30 simple. And they both move pretty similar to one another in regards to how they cross each other and things like that. So if you prefer the EMAs, by all means, use them, right? You guys should always use the indicators that are actually helping you make money in your account, right? The things that are giving you the clear signal and the clean setup. But for myself, the 10 and 30 have always worked well for me. And so that's why, I'm not going to change something that's not broken, right? So that's why I use it. But if you use the 8 and 21 EMA, they do move very similar to the 10 and 30. So I would say there's no harm in using the 8 and 21 either. It all just depends on what your preference is and what you find gives you the better signal to jump into a trade. So let's go on now to McDonald's here. So McDonald's, nice push to the upside. You started to get that bullish exhaustion that pulled back. The price consolidated, and then as it crossed below the zero line, actually got a bit stronger of a pullback move into the 100. The 100 period simple held. You got to bearish exhaustion levels. So that was a good sign that we would either chop or bounce up. We bounced up into resistance. But overall here, you can see that we've basically been in consolidation for the most part. And as of right now, we have a squeeze building up energy. We have a consolidated tool signal on the compound breakout tool. We have momentum coming back down towards the zero line. So that's resetting. That can be a sign of consolidation. Bollinger Bands, notice how flat they are, right? So they're really not anticipating a break above this level. And if you notice, the highs that we stalled out at back here, which are just shy of 300, is where we're currently stalling out at again. So this is definitely acting as a price resistance level. Now, that doesn't mean we can't break above it, but one, we usually want a little bit of agreement on our indicators to look for that break, which we're not getting right now. We have more consolidated signals on our lower indicators. And two, when you start to build into that consolidated range, then it's not uncommon, right, to have a squeeze form. And so the question is, will we actually attempt to move higher and maybe break above 300 prior to earnings? Or will we likely consolidate into the announcement? And currently, given all the technicals that I see here, I think it's more likely to consolidate into the news, right? We're not getting any sort of bounce up. We don't see any bullish signals down here yet. The trend is overall bullish, certainly, but we've been stalling. So if you're really looking to play McDonald's right now, let's see, earnings is next week. So if you want it like a theta decay style trade, I would keep it to this week's expiration. The reason why is if you were to put on something like an iron fly for next week, you're really not going to get that theta decay to work in your favor until after the earnings announcement, unfortunately. And the reason is because of course anything can happen around the earnings news, right? You can get those huge gaps and those huge volatile moves. And due to that uncertainty, what ends up happening is on the option chain, you actually start to see, oh wow, Apple really did pop. We'll take a look at that in a second. But what you start to see is you actually get a bit of option premium to build up in the strike, right? So that option premium actually gains in value because of the uncertainty about how volatile the move would be, aka how much of a range you're going to get into that expiration. And so unfortunately for things like iron flies, where the theta decay works in your favor, it's not going to next week, at least not until after the announcement, after we get the market's reaction to that news event. Then the theta decay could potentially rip out of the trade. So if you're looking at something for this week, I would be all for something like an iron fly or a consolidated trade idea given the technicals. Otherwise, though, I'd probably be sitting on my hands and waiting closer into earnings and then maybe doing an earnings trade around the announcement. But let's really quickly go and look at Apple. Like I said, I do have a trade out there. So beautiful bounce up. This must have happened quickly. Let's go to a smaller time frame. Yeah, boom, right to the upside. Great pullback move, though. It was hanging out at support levels. Beautiful bounce. I don't know what kind of news maybe came out around this. It makes sense. SPX, why that kind of had a sharp move to the upside for a second. It was probably off of Apple. But this is looking good on the daily chart, y'all. So Apple's one that we've been playing in the small account mentorship. We've taken some trades, taken some profits. We re-engaged into a trade the other day, and that is certainly looking good. Bollinger Bands are flaring open. Momentum is bullish. We have a bullish signal on the compound breakout tool. Oh, it just announced its entry into AI. Is that it? God, all you have to do is say your company is doing something around AI and the market is like eating it up, right? It's like if you want if you want your company's stock to turn bullish in any way, just mention AI and everyone is like head over heels for it clearly. Um Let me pull this up on my intraday chart on the side for those of you also following along with this trade, and I'll keep an eye on it. But I'm inclined to sit tight on this for a second. If it looks like it's starting to pull back, we'll take the quick win on the trade, or we'll profit recycle into a bonus trade here for this week. But let's see if it keeps stair stepping up for us, because we're making third deviation Bollinger Band snaps on the smaller time frame, certainly. And then SR mentioned Apple said all that in their latest launch event a few weeks ago. What's new is large language model spinware. Sure, SR. I mean, sure, right? If that's what's causing it to bounce, okay. I'll take it. However it wants to play that news, that's pretty funny. But certainly a nice bounce up. Does look like we're getting a little bit of a pullback here. So you know what? I don't want this to just erase on us. I think I might go ahead and lock in the profit. Let me see though how we can go about doing this in the most beneficial way. So for those of you who are new to profit recycling, basically what I'm looking at here is turning our long call into maybe some sort of butterfly trade. What that would do is lock in an overall profit. It covers the risk that we have out there on the 197.50 strike. And then it gives us a bonus trade right at 200, right? At a great psychological level to play into the end of this week. And so I do kind of like that idea, but I would like at least $1 of profit on this. So let me go ahead and set this up, and I'll take a look at it here if it doesn't fill in a bit and reevaluate how I want to trade it. Certainly, if you want to go ahead and take the profit here, you absolutely can. But I'm going to set that for $1.50 to turn that into a standard butterfly and see if I can't get the fill on it. And I'll keep an eye on that. But I also want to make sure we go over the things that you guys looked at. So let's go back over here to MRVL, pull that up. So MRVL, great daily squeeze, bullish signal in the compound breakout tool. That's still valid. Momentum was at exhaustion. It reset. As the momentum reset, the price consolidated. So it never got that strong pullback. That's actually usually a good sign for bulls. As long as you're not at something like a weekly exhaustion level, then usually if you're at, daily bullish exhaustion, it resets and all it does is chop. Then once it starts to build up energy again, you can usually go for that next leg higher, which is what we're trying to see here. Bullish momentum, bullish signal in the compound breakout tool. Bollinger Bands are starting to flare open. The 10 has rolled up off the 30, and we're stair stepping higher, which looks great. The only thing that I'd be a little cautious of is, of course, we're getting right by the prior highs that we had after the earnings announcement. So if you see any sort of stalling there, you might go ahead and look to take the quick win. Otherwise, though, with the room on momentum that this has, this can really, keep going and trending to the upside if it wants to. So does not look bad at all. If you're in something. Personally, it's not a place I would jump in. The day for me to take an entry would have been either back here off the pullback move or off the bullish divergent bar a few days ago to enter a bullish trade there. So that's what I'm seeing for that. And I'm not getting a fill on this cover order yet, guys. And we are starting to get a bit more profit taking that I'd compare to that I'd prefer to see. So let me pull up Apple again. I still kind of like the idea of having a bonus trade out there. So let me go ahead and just modify this down. Wow, this is really fallen down. Let me see the level 2 on it. It was like a quick move. Okay, they're not giving it to me. So I'm going to cancel the cover order and I'm just going to close it out, guys. We can always look to re-engage in it if it makes sense. And I filled at 87 cents for those of you following along. So over 100% return on our risk for what that trade was. If y'all are in the small account mentorships, we basically took a profit on that trade earlier today. We re-engaged and now we took another profit. So let me go ahead and get out an alert for that. I do apologize, guys, if I wasn't expecting that kind of bounce. Obviously, if you took the profit a little bit earlier, well done. But I am okay taking a quick over 100% return on the trade if need be. And certainly that is something I'll look at into the close today. If it holds support, then I would not mind re-engaging in that once again. Apple had a strong spike to the upside. I attempted to cycle into a butterfly, but was not getting a fill, and Apple started to experience some profit taking, pulling the underlying price down. So I decided to close here for a quick win over 100% return on risk. I may consider re-engaging in this later today. Keep if you have multiple contracts and want to leave a runner on, you can, right? Do what you think is best for your account. Well, that was fun. Did definitely pull back off those highs pretty quickly, though. I don't know. Maybe somebody fat fingered something off of that news of AI coming in, but happy to take the quick win. It is still, I'll show you guys the intraday charts that I'm watching over here. But I mean, for the most part, right, you had the third deviation Bollinger Band snap moves. So great example of how when you make a third deviation Bollinger Band snap, it will either stay within this range or continue higher. You can see that's kind of what we're getting. The hourly chart has a buildup in momentum, room to move higher. We're getting that bullish signal on the compound breakout tool. Bollinger Bands, of course, are flaring open. So I might look to jump back into this, with a small risk again and see if that news doesn't maybe carry through into the end of the week for another quick win on this. I mean, we've already taken 2 wins on Apple this week, but might as well see if we can't get a third potentially, especially if we get in for a low risk amount to where our profits already cover it. But I'll give this a little bit of time to settle to settle down first one way or the other before I look to re-engage. So I'll probably look at that closer into the close, but it's still doing a good job of holding up. It's not immediately rushing. I mean, it did feel like it was starting to rush back, but it is starting to pause here at smaller time frame support. So unless it pulls back into 93 again, there might be a chance to re-engage in that for this week, certainly. Yeah, and Marcus, I don't blame them for taking the quick profits. And yeah, fried jalapeno. First of all, welcome, and very happy these live streams are helpful to you. For those of you on Twitch or YouTube following along right now, and you're maybe newer, maybe you just discovered the stream today. I do every Wednesday have these sessions from 10:30 to 11:30. Most Mondays, I couldn't do it this Monday because I had some other work I was doing, but most Monday mornings, also at 10 o'clock, I'll be on the mic to specifically go over my game plan for the week in regards to what I think the market's going to do, maybe any news events that I want to be mindful of, and then to recap how the $500 challenge account is doing. And then otherwise, of course, if I ever jump into any $500 challenge trade, I do also post those to Twitch and go live. I would usually I'm not on the mic live, but I'll post my brokerage account basically to show you guys what the trade was, what it filled, and I'll have a little text box similar to. Oh, I don't have it open right now. Let me find it. But I'll basically have a little notepad with the trade alert in there showing you guys what it looks like. And I had to restart my computer this morning because it froze on me. So I can't seem to there it is. Here's the notepad. But I'll have something like this up to where it walks through the action that I took and what I'm looking to do off of it. So that way, for those of you who like to follow along with the challenge account, you certainly can. And then Aaron, you're announcing that your house is for sale and the main features that it has built-in AI. That might be the key to getting it sold in this market, certainly, right? But yeah, it does seem like people took those profits quickly, but I don't blame it. That's a sharp move to happen during the lunch hour, right? Usually the lunch hour is a little bit calmer. So I don't blame them. I took the quick win. Don't blame it, especially if it's like a this week expiration. But we do have a little bit of time, guys, left. So if you guys have any other symbols that you're looking at that you want to walk through, let me know, and I'm happy to pull them up here. And we can see how they look. MOS, certainly. None. Let's take a look at that. MPA and W, absolutely. Let me write them down in my notebook here really quick, and we take a look at both of those. Oh, and Ryokyo, really, the media was talking, there were reports saying Apple wasn't participating in AI, and now it is. Yeah, like I said, it seems like a good way for the big boys, the hedge funds, to kind of take the quick win, right? If you had the inside scoop on Apple, that's what was being presented to the media. You just get those quick out of the money calls for this week extra cheap, and then wait till that news is released, and on that spike, you take it off. Not to say anyone would ever do that, of course. Insider trading, that's crazy, Allison. All jokes aside, so on MOS here, we are in a bearish trend, right? So certainly not in agreement with the rest of the indexes in the market for what we see here. We did, however, start to find some price support around 30. You can see some true lows have started to print while the Bollinger Bands have flattened out. So that's usually a good sign that, one, we could start to go into a bullish trend move, but at the very least, we'll get some sort of pullback move if the bearish sentiment is still kind of weighted here. And you can see that's starting to happen. So we're starting to get that pullback move to the upside. The next target I would have for this, if it continues higher, is probably right around 40 to 41. That used to be kind of a price level back here from what we can see, and it's right by the 100 period simple. Now, for those of you who are maybe newer to this, keep in mind whenever something starts to go into a bearish trend below the 100 period simple, and then it retraces back up to test it, you need to be very cautious about how the underlying price can act, because the underlying price, if it can't get a strong break above that level and continue in a bullish trend, sometimes it's a fake out for bulls, and it's actually a place for the bears to re-engage. So that's kind of what you had back here. You had to pull back into the 100. You actually made a great bearish divergent bar holding that resistance. That's usually a good place to look at shorting it. And then, of course, not only did the bearish divergent bar follow through with the lower low within 3 bars, but you got the stronger pullback to the downside. So the run up could also be, a help from earnings. It could be trying to get that run up into the earnings announcement some. But if it gets up into that 100 period simple and it cannot break and kind of keep that strength going, be very mindful if you're playing this to the upside, right, of your capital risk that you hold out there, and consider taking the profits at that range. You can always look to re-engage back into the trade if it proves that it's breaking above that level and trying to go into a bullish trend, but you don't want to be caught out on a bullish trade to where the 100 holds resistance and it reverses. So not something I would want to participate in myself, but that's what it is currently looking like to me based on the charts. And then let's pull up PA and W here. So Brett's first asking, can you elaborate why you would take a long call versus spread? Is there something in the setup that would help with the choice? Yeah, so I do have some videos for those of you who don't know. Let me find this link really quickly. But I did make some educational videos around different strategies, around different indicators. And in there, I certainly talk about, in some of the videos, I talk about long calls and puts and spreads. And so there are a few different reasons why you might look at a long call versus like a vertical spread. And so let me share these with you because they certainly go more in depth in the time that I have left to be able to talk about this answer. So you can certainly take a look at those. If you, as long as you're signed up in Simpler, you have access to these videos. You don't, as you know, because you are signed up for the free room, right? So as long as you're signed up in the free room, all of these videos live in the archive, and this spreadsheet is a great way to be able to find the videos quickly. Of course, I have to find the link to the spreadsheet, which I used to have. There we go. Let me just repaste that there so it's so it's made available quickly. I'll post this in the alert section. I'll also post this over for those of you on YouTube, and you guys have the resource if you jump over to the Simpler website. But let me pull it up here so you guys can take a look. But it's not only myself, some of the other traders here have done videos around this topic. Basically, you know, things to help out newer traders. Every video that I did is going to be within this first column here. So you can see I have things like intro to strangle, straddles, diagonals, all of this you guys have access to. Strategy versus setup, managing winners, how to select expirations, right? And then we go into indicators for those of you, you know, we've been talking about the divergent bar quite a bit today. So if you want more information on the divergent bar, you can look at that there. But certainly take a look at those videos because I do answer that in there, Brett. But in short, usually a long call, I'll look at when there's a squeeze set up, when I think there's going to be a greater than anticipated move. And of course, if it lives within my risk tolerance. If, however, I'm trading something like SPX, where a long call can be pretty expensive, especially if you give yourself time. For those of us who trade smaller accounts, it might not be within my risk tolerance. So instead, I might consider a spread. A spread is a great way to reduce risk, but still be able to take advantage of a move. Another reason, though, I might look at a spread over a long call is like the situ with AI, right? When we talked about AI earlier, I mentioned I like the idea that it could bounce up, but I'm cautious of this 45 level. So instead of doing a long call, which if I had to sit through the chop on the entry on it, may or may not have been profitable, right? The theta decay might have hurt me on that. The spread, the vertical debit spread that we put on for the challenge account, one, benefits a little bit more from that theta decay, right? That short strike helps offset the theta decay that would be happening on the long strike. And two, if you notice, I placed the short strike right at a level that I'm looking to see if it can hold. So that way, if it can hold and we go up and test that range, it pushes that entire spread in the money to allow for a profit that way. So there are a few different reasons why you might look at a spread over a long call. And I'm, of course, talking about debit vertical spreads, credit spreads. If you think that the market could be a bit more choppy, but it's certainly going to hold a level and you're uncertain, you'll get the directional move, let's say to the upside that you're looking for, then a put credit spread might actually be more advantageous to the account because with a put credit spread, you don't necessarily need a strong bounce up. All you need is for your short strike to live out of the money and you can take a profit that way. So few different reasons why. But certainly take a look at those that can help you. Like I said in those videos, there's what to choose an expiration with and why and things like that. And a lot of those videos that I did, I made slides over as well. So I tried to make it as educational as possible for y'all. But let's get back to PANW before my time is up here. And Mike is mentioning, I'm 67 years old, Allison. 67 years young, Mike, right? My gut is a great technical indicator. I believe that PANW will have another huge trend changing down day. So let's take a look. I mean, it's had a beautiful run up. So if you're looking for a down day, it's kind of a counter trend move based off the daily chart. That, you know, is kind of going against the trend there. You do have a squeeze building up. You're holding support. But let's take a look at the weekly chart because the weekly chart, if that's at exhaustion, could be in line with your gut indicator, right? And how it could have a down move. So when we pull up the weekly chart here, the momentum bars are definitely at the top of the axis. The issue with this and the thing that you'd want to be cautious about is we've actually started to adjust the axis higher. So what do I mean by that? Well, prior to that strong move to the upside recently, this used to be the top of the axis for the awesome oscillator. And usually when you hit that level and it stalls, it gives you those red bars. That's a good sign of exhaustion. And of course, with exhaustion, like we talked about earlier, you'll either chop or you'll get a bit of a stronger pullback move. And, that's kind of what you're looking for, right? Well, what's happened recently is PA&W's had such a strong move up that we've actually adjusted the axis higher. Now, usually that's more common on things that have had recent IPOs, right? That's still trying to gather all that technical data to create the chart setup. And to, basically on new IPOs, they're kind of like toddlers, right? They're still trying to figure out their personality type. And so it's easier for you to adjust the levels on things like the awesome oscillator on newer IPOs because it's still trying to gather all that historical data to give you a top and bottom range. But what's happened here is this, clearly has the historical data, but this move that we recently had was so strong that it started to adjust the axis higher. And when that happens, basically it can keep going, right? It can keep going as long as it wants. And the way to figure out whether or not you're at a new exhaustion level is to wait basically for at least a few red bars in a row, right? At least 2 or 3 red bars in a row. And if you start to see that, then that might be a clue that you're at new exhaustion levels. And in turn, you might either start to stall in the underlying price or you start to pull back down. And so right now we don't have any red bars. Our bullish signal on the compound breakout tool is still valid. Last week we came down, tested the 10, that held and bounced. Bollinger Bands are still opening to the upside. Your trend is still bullish. So personally, I would still be very cautious about trying to short anything. If we keep bumping up into 260 and can't break above it, then it might be a clue that we're stalling. But oh yeah, and here's another reason why we might not get a stronger pullback. PA&W on the monthly chart still has a valid squeeze. Bullish signal on the compound breakout tool. Momentum's building up. It has room to move up to the top of the axis here. And this is what I mean by, on the monthly chart, PA&W is more like a toddler. It's still trying to get that information, but it has room to the prior exhaustion level that it reached. It actually made a third deviation Bollinger Band snap last month, which means the price could either stay within last month's range or continue to the upside. So if you're really looking for a strong pullback move, you're fighting the trend. It doesn't mean it can't happen. Like today, for example, we are making a bearish divergent bar, so maybe that could follow through with a lower low. But once again, it's a counter trend signal. And with green momentum building up today, I would actually be looking at this for maybe a re-entry to retest 260 again, if not for the roll to the upside, especially if it can't break back below the 30. So I'd be a little cautious on that. Not to say that your gut is wrong, Mike, but if you really wanted to play this to the downside for whatever reason, I would caution it by saying jump into a smaller amount of capital risk than you normally would. So if your normal capital risk tolerance is, let's say, $500, only jump into a bearish trade idea for $100 of risk. That way, if it doesn't work out, well, then you're managing a much smaller amount for your account. And if it does work out, great, you have some skin in the game, but you'll be much happier doing so on a smaller amount of risk and then maybe building up into the full $500 of risk once you get some confirmation that things are starting to break. But right here, nothing is really breaking at this point to tell me to play it to the downside personally. So it'd be outside of my trading rules to be able to do that. And TJ, yeah, if in the small account mentorship, for anyone who's in there, every Friday we go over all the trade action that we took for the week. We talk about what won, what lost, what we opened, what we closed, and we do that every Friday into the close of market. So we do track our trades in there. And then of course on Mondays, here for you guys on Twitch, on YouTube, I'll also track the $500 challenge trades specifically in that account. But in the small amount mentorship on Fridays, we cover everything, both in the $500 challenge as well as action taken in the main account too. So, and that unfortunately is my time, guys. I'm a little bit over. So I apologize if I didn't get to all your questions, but I do have to go get the kids and myself some lunch before my next session here at Simpler. So thank you guys so much for joining me. As always, may the trade be with you, my fellow Jedis, and I look forward to talking to y'all next time.